Welcome back, guys. Welcome to Lunar Beaches Crypto. We ride the waves of the crypto market all the way to the moon. Don't forget, none of this is financial advice. This is for educational purposes only. All right, guys. So in this video, in the first video, we went over market structure. In the second video, we went over reversals versus continuation. And in this video, we're going to be answering a question a lot of traders ask, new traders ask, is where should I pay attention to price? So we're going to go over just supply and demand, just basic supply and demand. So before we get into that, please hit that like button and subscribe to the channel if you are new. All that good jazz. Click the notification bell, yada, yada, yada. You already know the drill. Let's get into it. So I just drew up this little schematic here. And so first we need to understand what supply and demand is. It's not magic. It is simply areas on the chart where we see aggressive buying is overwhelming selling. So that would be here. And where aggressive selling is overwhelming buying. So price doesn't react to lines, it reacts to unfilled orders. So where the market is going, it is searching for unfilled orders so that it can fill those orders. But the gist of it is you've got demand, which is going to be your support, and supply, which is going to be your resistance. So if price is moving to the upside, you are moving towards resistance. And if you're moving to the downside, you're moving towards support. So when price moves aggressively away from a level, it usually means not all of the orders were filled and institutions still have interest in those areas. So price will often return to them to rebalance the market, to mitigate or to test whether that interest is still present in the market. That's neither here nor there. Really, what you need to know is what to spot and how to spot it in the market. So for me, I'm looking for large moves, big impulsive moves with very little overlap, tight consolidation ranges, and just aggressive moves away from any area. Just for aggressive moves. Because that means we're seeing big orders taking place at those areas, which is where you will see, or this is where you get your supply and demand. So in this just simple schematic here, you can see we have this consolidation range on here before a big breakout. So we break a break of structure, like we talked about in the first video, get a break of structure and a continuation of the trend. So that is telling me what? That tells us that buyers are in control of this range, pushing to the upside. And if I know that buyers are in control here, then I know that I have some demand in this level, in this region. Also, I have some demand in this region, in this zone. And once we get the break of the swing levels, okay, once we get that break, okay, now we want to go ahead and mark off supply. So we've got demand is at your lows where price continued higher. Supply is where we came down and we broke structure. So that is key. You return back to supply and then you move down further to demand. And you'll often get price reacting to these levels several different times. So it's important to just keep that in mind. Especially if you're looking into getting into scalping, you can actually play the internal ranges a good bit. But just make sure you understand that sometimes the better moves are on the higher time frames. but just keep it all together, okay? High time frame, low time frame, doesn't really matter. So, looking at this chart, this is essentially what I just drew up. You see the big push here. I mean, we do get a big push here, so I'm just going to take this zone right here before the breakout. So that is going to be key as well. We get the breakout, so I assume there's nice demand at this level. There's also going to be nice demand at this level. I actually like this one a little better because we see longer consolidation, but notice how tight that consolidation is, meaning it's not a wide range like this, right? It is really, it's all within this small box. Then you get the break. So I really like this as a demand level. This can act as a demand level as well. And it will in the future. But for now, I want to pay attention mostly to this level right here. That is a continuation level. So you see the breakout from this. So if we go from low to high to low, breakout, pull back, consolidate, continuation. So that is key right there. So we're going to get rid of this lower level because we don't care about that one right now. Let's go ahead. Now we see an aggressive push away from this level here that also takes out these lows. So to me, I'm going to go from the last low to the last high, and this is going to be a supply zone. Now, if you're following along, you can already tell where we might have some support right here. This last little high to low before this push up, price comes back down to that level and it gets a reaction off of it to the upside. Now, it's not a strong reaction. It's not a very strong reaction at all. It actually shows a little bit of weakness as price. You're seeing a lot of overlap. I talk about this a lot on my lives. You see a lot of overlap in these waves, and it's just choppy and sloppy, as we like to call it. Just nice, choppy and sloppy. It's not really showing a whole lot of strength. Price likely wants to go lower to this better demand zone. But what about this little level right here before this big push? We don't really want to mark off all of our levels, every single little zone that could be demand and supply. I mean, we can, but your chart will start to get cluttered very quickly, and you can play off of them, as we'll find out here in a second. You can play off of them, but it's often short-lived if it's not significant. If it's not a significant level. So on this move down, we can see we did pause right here. So this is your internal, these would be your internal supply and demand zones. And you can see this even acts as a supply zone as we come up to it, reject it, come up to it, sweep it, reject it, come down, come back up to it, reject it, come back up, reject it. So this is obviously a nice little supply zone in here that you can, take some scalp trades on. Scalping being short-term trades. And you come down to this demand level again and get a push back up into that supply. But price is still choppy, price is still sloppy, and ultimately we do, look at that, another bounce off of here. So you could play this level for several days, couple of weeks actually. You could play that one level. These two levels, you could play those for a couple of weeks up and down. Pretty nice. I mean, I could even take in this little zone right here, and you could play here. Look at that. So your demand is on your bottom side, your supply is on your top side. But let's get rid of the noise. Those would be for scalp trades for later. Let's just look at our overall high time frame trend. And you can see we do ultimately get back down to this level. And then what do? We turn right back to that supply zone. So, and you also get a market structure shift in here before you get that push to the upside. Come down, come up, come down, come up, come down, shift. You break this high, you come down, and then you get continuation. You got another high here that you build on top of before you get that push to the upside. And what you're doing is you're actually coming back into this upper range after coming down to find liquidity at this demand zone. You get your reversal, and then you get your continuation. So we don't enter on this pullback here. We wait for the break of structure here, and then consolidate and hold back within the range, back on top of these highs, and then you get the move to the upside, back to supply. Now this does take out the supply zone, but you can see we get an aggressive selling off of that level, and we come down and we break this internal swing level in here, and then we continue back to the downside. You get another tap of that same demand zone, big push to the upside, but it ultimately rolls over, and then we get back to that very first demand zone down here. Really? Down here. Because this would be at a swing level. This is your swing low. So you go low, high, low, swing low. Back to that level. Boom. And there you go. Back to the upside. Where are you coming up to? Let's see. We've got a zone here. Boom. Sell. We've got a zone here. Quick move to the downside. Boom. Resistance. What do? Come right back down to this demand zone. I mean, you could go on and on. Obviously, you want to play the zones within ranges. So this would be a range right here. From low to high, that is a range. Or from high to low, that's a range. And you want to play off of those ranges specifically. In my opinion, that's what you want to do. Last high before the low, I'm going to grab that. And then you can see we consolidate right on top of that before pushing back to the upside. So as long as you understand your market structure, your highs, your lows, your higher highs, your higher lows, I deleted all that stuff. But yeah, as long as you understand your market structure and what to look for as far as impulsive price action, this is going to be your demand. I prefer to tighten it up. This is what I look for. So if price is moving to the downside, and you come up and you break and you start moving to the upside, I prefer taking that last high, that last internal swing high, and taking the low and using that as my area. Same with the ups or downside to the downside. Sorry, pushing to the upside, rather. Pushing to the upside. This is like internal levels. So I like to take that last little swing and mark that off as my supply. Bonus points if you break internal lows and you return to that supply zone and you get continuation. So yeah, that's going to be it for this video on supply and demand. I hope you enjoyed it. Please consider hitting that like, subscribe, notification bell to be notified whenever I drop new content and when I go live. Thank you all for watching, and I will see you guys in the next video. Mad love. Peace out. God bless. Ride the waves. Bye.